you reckon loyalty pays? Tell that to the energy companies, the banks, and the telcos. Right now, nearly 40% of Aussie households are paying a loyalty tax, handing over hundreds every year just because they're too polite to switch providers. You're literally burning your retirement cash to keep a faceless corporation's profit margin afloat. Today, we're going through 7 things you're paying for right now that aren't worth a single cent of your hard-earned pension. And believe me, item number 3, it's a complete stitch-up. 1. The super fee leak, the silent retirement killer. Let's get stuck into the biggest culprit of them all, the superannuation fee drain. Most of you haven't checked your fund choice since the Howard era, have you? You're in set and forget mode. You think, well, it's super, it's just ticking along. But here's the reality. The super guarantee is now sitting at 12%, which is great for your future. But that growth is absolutely useless if the fund manager is dipping their hand into your cookie jar every single month with hidden admin fees. Think about the math for a second. If you've got $250,000 in your account and you're stuck in a dud fund charging excessive administration fees, you're losing money every single day. We aren't talking about spare change. A difference of just 1% in fees might sound like peanuts, but over a 20-year period, you're looking at bleeding out over $35,460. That's not a management cost. That's a European holiday, or a decent car, or your medical gap payments for years to come. That cash is sitting in someone else's pocket, or because you couldn't be bothered to switch to an industry fund with lower fees. You've grafted for 40 years to build this nest egg. Don't let a faceless admin fee nibble it down to a pittance before you even get to touch it. Check your annual statement. If you see fee structures that look like a phone number, move your money. 2. The gold policy rort, private health insurance. Now, let's look at something that's meant to keep you alive but is currently killing your bank balance. Private health insurance. You're over 60, you've got a few aches and pains, maybe a dodgy hip, so you went out and bought the gold cover, the premium package. The one that screams, I am not taking any risks. But pull that policy out of your drawer and actually read the fine print. You're likely paying for a gold-plated bundle that includes things you haven't needed since the 80s, like pregnancy support, fertility assistance, or orthodontic work for teenagers. It's an absolute rort. You're sitting there in your 60s, paying for obstetric services that are mathematically impossible for you to use. It's like buying a brand new Ferrari just to drive it to the shops once a month. The insurers know this, and they love it. They bank on the fact that you're too worried about your health to do a proper audit of your coverage. If you're paying $3,450 a year for a top-tier premium, but you're never touching the extras, you're just throwing money down the drain. If you're paying for chiro, acupuncture, or pregnancy support that you never use, you're just funding someone else's wellness retreat. Call your insurer, strip that policy back to the hospital cover you actually need, and keep the difference. It's your money, not a charity donation to a health fund's shareholder dividend. 3. The $221 loyalty tax, energy and gas. Speaking of blind loyalty, have a yarn with yourself about the energy and gas bills sitting on your kitchen bench. We Aussies love the idea of sticking with the same power company for a decade, thinking we're good customers who'll get a fair shake. But let me tell you, that badge of honour is a sucker's bet. The big energy providers aren't rewarding your loyalty, they're counting on your laziness. According to the latest findings from the Australian Competition and Consumer Commission, if you've been stuck on the same energy plan for 3 years or more, you're effectively paying a loyalty tax. On average, that little habit is costing you $221 more every single year than it costs someone who actually bothers to switch to a new market offer. You're literally subsidising the cheaper rates of new customers and paying a premium just for the privilege of never changing your password. The companies know you hate the paperwork, and they've priced their complacency tax exactly where they know you won't look. Stop donating your holiday fund to the energy grid. 4. The extended warranty scam. If you think that's a stitch-up, wait until you're at the checkout at the local electronics store. You're looking at a new fridge or maybe a television, and the salesperson, let's call him Kevin, sees you coming. He's got that rehearsed, glossy smile, and the moment you're at the counter, he drops the line. For just $200 more, you can have complete peace of mind with our extended warranty. It sounds like a bargain, but it's the biggest con in the retail game. Under Australian consumer law, you've already got rights that make those extended warranties look like a total waste of space. The law says that products must be of acceptable quality and fit for purpose for a reasonable amount of time. If you buy a $5,000 fridge and the compressor gives up the ghost after 2 years, the retailer is legally on the hook. You don't need to pay for an expensive protection plan to make them do their job. They have to fix it, replace it, or refund you, regardless of whether you paid for their little insurance slip or not. These companies are essentially selling you a policy for rights you already own for free. They bank on the fact that you're nervous about a big purchase, so they use high-pressure tactics to make you feel like you're taking a massive risk. Your receipt is your warranty. Keep it safe and bin the upsell. 5. Legacy telco plans. While we're fiddling with things in your pocket, let's look at that mobile phone bill. You've likely got a legacy plan you signed up for years ago. You're shelling out $70 or $80 a month for a massive 50 gigabyte data bucket. But let's be honest, you're using maybe 2 gigabytes to scroll Facebook, check your emails, and have a video call with the grandkids. That's it. The big telcos absolutely love it when you don't check your usage. They are banking on you being too complacent to compare. You can grab a no lock-in SIM-only deal right now for $20 or $30 that gives you more than enough data for your actual needs. That difference is $600 a year, cash that stays in the telco's pocket instead of yours. Your phone isn't a status symbol, it's a tool. Stop paying for the platinum version of a tool you barely use. 6. The 18% credit card trap. If the phone bill is a minor ache, the credit card trap is a full-blown headache. You've been sold a lie that making just the minimum payment is doing the right thing. It's not. It's the easiest way to ensure you're still working for the bank long after you've retired. Right now, the average outstanding balance on those plastic cards is slugging you with interest rates hovering around 18.62%. Collectively, Aussie households are paying billions of dollars every single year in credit card interest alone. That is a staggering amount of cash effectively lit on fire. If you're carrying a balance, you aren't a customer to them, you're an annuity. You're just a slow, steady stream of passive income for the lender, built on your anxiety and your procrastination. The bank loves your loyalty, but they'll bleed you dry in interest if you let them. 7. The clutter trap. Finally, let's clear out the garage. We all do it. You see a bargain at the shop for $5 or $10, you think that'll come in handy, and you toss it in the junk drawer. Next thing you know, your house is a maze of just-in-case items you haven't touched in a decade. It's not just the money, though all those fivers add up to a couple of $100 a year that could have stayed in your pocket. It's the mental load and the physical hazard. A shed full of maybe one-day projects isn't a workshop, it's a trip hazard waiting to happen. A clean, empty drawer is better for your wallet and your sanity than a shed full of stuff you forgot you even owned. So that's your checklist. 7 things, 7 quick fixes. Don't just watch this and move on. Do yourself a favor. This week, pick one afternoon and go through these 7 items. Audit your super, check your health cover, switch your energy provider, keep your receipts, fix your phone plan, kill the credit card debt, and clear out the cobwebs. It's not cutting back, it's taking back what's yours. Get to it.